Hi, this is Stock Investor Davis. Let's take a look at ASML, reviewing its 2023 quarter 3 results, followed by it looking ahead at its fourth quarter guidance and beyond, and closing with a technical analysis of the stock price today. There are chapters below if you want to skip ahead to a certain section. Please like and subscribe. Before we start reviewing its financial statements, keep in mind that this company uses euros as its currency, which has a conversion rate of 1.07 per $1. That said, we will use the company's figures in euros unless otherwise noted. With that out of the way, let's look at its income statement, starting at the top and working down through its 9-month period 2023 compared to 2022. We see its net sales increasing by nearly 5.6 billion euros due to its increase in its system sales to 20.3 billion. We see cost of sales increasing about 2.6 billion, resulting in an increase in its gross profit by roughly 3 billion to a total of 10.4 billion. Its income from operations and net income are up 2.3 billion each, resulting in its income from operations to 6.6 billion euros and net income to 5.8 billion euros, all of which is good to see. The only negative is its increase in tax expense year over year, which is expected given its sales growth. Let's now look into its margins by percentage. Looking at ASML's margins, we see improvements in its margins year over year for the 9-month period 2023 compared to 2022. We see its gross margin improving to 51% from 50%, its operating margin improving 32% from 29%, and its net income percentage improving to 28% from 25%. We also see its unit sales going to 325 from 239. The only fault is an increase in income tax going to 15% from 14%. When we compare this quarter to last year's third quarter, we see almost the opposite story. We see its gross margin flat at 51%, its operating margin down from 33 to 32%, its net income margin down from 29 to 28%, and a greater impact from income taxes going from 13% up to 15%. When comparing these two quarters, it may look promising, but all the profit margins look solid. Switching to its balance sheet, we see its current ratio is above 1, which is generally a good thing to see. Otherwise, there are a handful of significant changes, including decreases to its cash, 2.2 billion, and accounts receivable, 1.4 billion for assets. We can assume that these decreases are due to its asset increases in tax assets, $800 million, inventory, 1.2 billion, and property, plant, and equipment, 1.1 billion. Along this line, but switching to liabilities, we see an increase in long-term debt by 1 billion. This, along with the asset changes, can be attributed to the decrease in current liabilities by 1.6 billion and contract liabilities by 1.4 billion. Lastly, we see its equity increasing by nearly $3 billion due to its income. Transitioning to its cash flow statement, we have highlighted and annotated the larger movements from the 9 months ending and for the quarter year over year. Right off the bat, we see an improvement in its income statement for the year by roughly $2 billion. Then, more money spent towards changes in assets and liabilities, $3.4 billion. Property, plant, and equipment, $700 million. And less money spent on purchases of treasury stock by nearly $3.3 billion. We touched upon most of these changes when reviewing its balance sheet. The one change not discussed is the big drop-off in its buybacks, going from 4.3 billion through 9 months in 2022 to now 1 billion in 2023. Looking ahead, management is projecting net sales between 6.7 and 7.1 billion euros with gross margins above 50%. That's at least $1 billion more in revenue, which we're expecting 300 million of that to reach the net income. It also mentions net sales growth towards 30% year over year. Calculated out, that equals projected revenue near 7.2 billion, near the top of management's guidance. Looking even further ahead, out to 2025 and 2023, ASML sees a scenario where its revenues will be between $30 and $40 billion. For year end, we're currently estimating total revenue around 27.5 billion, so this appears reasonable. Management goes on to say that by 2030, total revenue will be between $44 and $60 billion, meaning on the low end of the range described, it will be adding roughly $2.3 billion each year for the next 7 years. Right now, that's a growth rate that goes from 8% down to 5.5% come 2030. Additionally, the company states by 2025, gross margins may be between 54 and 56%, about a 3 to 5% improvement in the next 2 years, then improves to between 56 and 60% by year 2030. Moving to the analysts, as of 11/8, they are projecting 7.3 billion US dollars in revenue, which when converted to euros is roughly 6.8 billion. This is on the low side of management's guidance. Carry this to its year-end estimate of 28.9 billion in US dollars, which when converted is 27 billion euros. Based on the company's 30% growth for the year, we're estimating 27.5 billion euros for the year. Following through to the earnings per share, analysts show $5.11 for the quarter and $20.69 for the year in USD, which equals $4.77 for the quarter and $19.34 for the year in euros. Based on its third quarter results of €4.81 and expecting a greater return, it appears the analysts are on the low end based on my estimation. Carried forward to year end, we see analysts show $20.69 in USD, which equals $19.33 in euros. When we add our final quarter's estimate and add it to the previous 3 quarters, we reach $19.50 in euros, which is nearly $20.87 in USD. Wrapping up with its technical analysis, ASML $639. It appears to have broken upward out of its downtrend started in June 2023. It likely found support at 576. Some resistance is seen at 667. I don't like the price. Thank you for watching. Please like and subscribe.